I want to start with your view of the Biden administration's response to the failure of Silicon Valley Bank. Until very recently, this bank had not been regarded as large enough or important enough to the overall financial system to warrant the tightest regulations, the highest capital requirements. But when it suddenly got into trouble, the Biden administration rushed to mount a rescue operation, and a quite extraordinary one. Were they right to do so? Would the failure of a bank of this size really have threatened the entire financial system?
So David, I don't think the issue was Silicon Valley Bank in isolation. I think over that weekend where the FDIC, the Fed, and the Treasury got together and they invoked their systemic risk option, which was given to them under Dodd-Frank, under their resolution authority. I think they were thinking of the entire small and medium-sized banking community as a whole. We were seeing signs, not just at Silicon Valley, we were seeing signs at many small and medium-sized banks of lack of waning confidence in depositors in those banks. And had the authorities not stepped in to Silicon Valley Bank, I think we would have seen a massive move of deposits out of small regional and mid-sized banks on the Monday and Tuesday. And we would have seen a horrible issue with liquidity in the United States. And we would have ended up in a situation which is really what the Federal Reserve and the regulatory community fears the most, that we would end up with a handful of very large banks in the United States, because depositors feel safest in those large banks, the quote unquote too big to fail banks. And the last thing they would have wanted to see is all of the money moving from the small and medium sized and the regional banks into the globally systemic banks and the too big to fail banks.